that. But I think this week, I really get a sense a lot of the time, from our grads and from guys who are new, they're kind of, not that they're afraid of macro news trading or events, but there's a sort of a hesitation to really get into just trading perhaps news, or to look at the market from a sort of a more fundamental perspective. And I understand why. When I was sort of super green, when I was super new, I just thought, that sounds very complicated, I'll never understand it myself, what's going on, I'll just stick to technicals, price charts, order flow, and that kind of stuff. And that's good, if that's your edge and you recognize there's your edge, that's fair enough. But you really want to have more arrows in your quiver, let's say. And one of them is trading news, one of them is understanding markets through the macro sense. But the crux of it, and the key for myself, which really unlocked a lot of opportunity, in terms of the markets, because we're here to talk about, finding opportunity, is understanding flow and correlations. So that, for me, the correlations and the flow really unlocked so many things for me in trading. And if there's one thing you will see that everyone's uniquely good at, on the trading floor, regardless if they're more like technical based or if they're super flow and news heavy, is that they're super competent, very good at understanding correlations and flow. And when I say correlations, it's more like seeing on the on the price ladder how if there's, let's say, there's risk on flow, and if you want, I'll explain what that is. You'll see that the lead, for example, the equities might bid and the bonds will offer, and you'll understand how the market's thinking in that sort of that period, that in that place of time. And that sort of unlocks opportunities. And how you frame that flow within the context of the week, the context of the day, the context of the session, based on what's happening and how the market's thinking, that's really powerful. And if you can do that, and I promise you it's not that difficult to really understand, you just want to sort of embed yourself, looking at research every day, reading it, putting it down, and so on. This is what we do on a Sunday. So on Sunday, regardless who you are, regardless if you're a senior guy, a junior guy, whatever, you're going to be preparing, and you're going to be spending, quite a few hours preparing in all sorts of ways. But the one big thing that everyone will prepare for is just, you're reading the weekend news, you're looking at weekend markets, you're doing your preparation for the week ahead. And, that makes sense, because of course you would. You're professional traders, this is your craft, this is what you do. And, you're not going to come in there, sit down 5 minutes, and have no idea what's going on, and you'd be comfortable. Perhaps maybe there's one or two of you out there who can do that, but not something I recommend, and not something that new for new traders. And this is why I felt quite strongly about the show. Like, on this show, we want to have, on this stream, we want to have very senior guys who've been trading massive size, old guys. We want to have them on. We want to have guys like myself, who's a bit I'm not green. I've been trading for a few years now, so I'm a bit ahead. But I often, especially last year, I've had even more value. Like, I've improved my learning by learning from guys who are just ahead of the curve of me. They're not like 10 years or 15 years ahead in their career. They're just like a few years, because their ability to be consistent and then trade well, and then trade really big. Some, for example, you may have seen videos of Joe on the YouTube. He's increased his size from 3 to 4 bunds to like, I've seen recordings of him, I think, if I'm not mistaken, trading like 700, 800 bunds. Okay. And he was in my seat only a few years ago. So this is why I think we want to have a variety, and so guys more junior like myself and senior. Okay, so again, great opportunity for me to just see with my own eyes how I would actually prepare. I haven't gone into this with a massive amount. I haven't looked at everything and just digested everything and said, oh look, I'm going to give you a super sleek presentation of, boom, this is what's happening next week, this is what we're going to do. I'm a bit raw myself, so I've been following just a few key themes on the market last week, and watched how the market traded, let's say, on the Draghi sort of forming a new government in Italy, how the BTPs traded on that, or NFPs, things like that. So this is what we'll do. And usually myself, and this is common with a lot of guys, before we even look at charts, because we don't really okay, this is my opinion, but we don't really want to bias ourselves too much first at looking at charts. What I will do is I'll sit down right now and open up, without being cheesy, without being flip into whatever, I'll open up literally what is. This is it, guys. The secret source, the secret #1 lethal weapon to improving your trading. Your #1 execution platform. It's worth, $1 million, everything. And I'm gonna open it right now. And what is that? That's Evernote. Okay. So okay, maybe not what you're expecting, maybe it is, but here we go. So Evernote is, without a doubt. Let me just maximize this. It's everything. So we journal, but not perhaps right now. I'm going to talk about journaling your own trading, evaluating your own trading. We're going to build the portfolio of themes. We're going to build a portfolio of how the market reacts to certain things. We're going to build a portfolio. It's basically like taking your brain and rolling it in data, in understanding, and just digesting it in all the information out there. Because we're going to go through the research now. It's going to get so confusing. We're going to look at ING. We're going to ING Think. We're going to look at what some bank research is saying. We're going to look at this and the other. And if you just skim it or whatever, there's no digestion and you sort of lose yourself. And that is very much. Okay, you saw that coming. Yeah, okay. It is also the latter. Let's put that on #2. But #1, this is what's going to get you profitable. Okay, it's going to be prudent evernoting in so many domains, and one of the domains you're going to see is sort of building the theme book. Now, for me, and this is what we're going to talk to you today. When I really reviewed a lot of 2020, it was apparent that a lot of my good P&L, a lot of the chunk of my profitable trading was really trades which I expressed. I traded macro, I traded news, I traded themes through technicals, through the footprint, through profiles, through everything. And and then I looked at other things I was trying to do, other strategies and so on. But it's kind of like if you're applying the 80-20 rule to your trading and you want to look at the most profitable areas of your business, and you're saying, well, that department's doing really well, that department's doing really well, but we're losing so much money in the other department. What the hell are those guys doing? Just get rid of them. So for a long time I was sort of trying to reduce my weaknesses, which worked well. But I think this year I'm shifting strategy and saying, in fact, just get rid of the guys who still just can't do it, and then just say that department there, the macro, through technicals, let's double down on that. Let's give them a bigger budget. So when I have this kind of place, when there's like an insanely juicy level, which is just asking to get broken, and there's strong flow because of news, then I'm gonna triple my size or double my size and really focus on that. Which would mean, obviously, as a consequence, I'll be trading far less frequently than I would be otherwise, if I get rid of some of my older strategies. But that's just how it is, and that's how the market is. So that's how it looked like for me before. So now if I go to, so this is what I now prepared for us today. Okay, so let me now see. In fact, let's take a little pit stop and look at some of the questions. So obviously, what's the market going to care about, especially if it's Sunday? We haven't had the opportunity to reprice that risk, to reprice the headline. Now So it's very easy. Wall Street Journal as well. You just look after the main headlines. What's the main talking points, just to get a flavor for the themes. That's what you're interested in. You don't want to go, and this is again what I'm really hoping you guys get value out of the stream is the fine point where you are a trader. You want to have the skills to understand the market, kind of like an analyst, but you don't want to go. You don't get paid for being an analyst. You get paid for being a trader. So you don't want to examine something to the nth degree and you could pass your CFA exam because you've done that much research and homework. Okay, just by understanding, you want to understand the market themes and so on. And that may sound a bit complicated. That might seem daunting, but trust me, it's not, because once you understand, you see the themes and you see the flow, and you see then a lot of times how the market reacts to that flow, to that theme. Yeah, it makes sense. It'll come to you, like you'll just understand. Okay, so yeah, okay, so on Reuters, there's nothing really that leaps out apart from, obviously, now if you go on Bloomberg, the Astra vaccine development to fight South Africa variant. Okay, there's a new one. If I didn't misread this title, let's go on it. Okay, so we got adaptive show could be ready by autumn. Okay, that's perhaps good, because one thing that's been coming out is this risk that the new variant is gonna, come out, the vaccines aren't effective, and boom, we're gonna get a huge risk off because, all of a sudden, then what's gonna happen to the vaccine is just gonna unwind all the good progress they've been making in, providing immunity. But now, look, new development to this theme that's been happening. Okay, so since we've already identified the themes, we can come back to our here our Evernote and just say new strain, and just say SA variant. Can I spell? Okay, let's just call it var, because obviously can't spell on the live stream. And then new variant, and then just say okay, and then new Astra vaccine autumn. Okay, there we go. And now here we go. This is the one thing that's very interesting. Now we have so this is the one thing the market loves to attach itself to. It loves to attach itself to timing expectations. So for anyone that's familiar with trading, let's say central banks, when they're trading, understanding what FOMC speakers, ECB speakers, one thing you'll notice is that they're very hesitant a lot of the time to attach themselves to, time, okay? Because the market's going to react very specific to that time that they may or may not. Obviously, this is different. This is what we're trading, with the vaccine, so it's different. But if the market now attaches, says, hey, we expect this vaccine by autumn, hey, maybe it's okay, maybe it won't be that bad. But now we want to be on the lookout. Every time we understand that we hear the squawk, we see on Bloomberg, we see on our news things, that we even hear the whiff of saying, hey, the vaccine is not going to come out, the new variant of the vaccine for the South Africa variant is not going to come out in autumn, it's going to be delayed another year. And then we hear the new variant's taking over, and all of a sudden, that the theme is in your head, okay? So you want to be looking out for these little clues, because the market will just go off like a change in that, say autumn next year, boom, it will go. Maybe it won't be a huge move, maybe we'll have different legs, but you will have that sensitivity, for example. This is kind of like a sort of a more forced example, but I think it's just a good one to show you guys. Okay, so yeah, so you can go that way. That's a theme. Okay, so new strain. Okay, let's add it to that list. So in fact, let me go like this. And then we can go just so it filters out the the news better. Okay, so we've done that, but it's very sort of like loose. We're not there really to just dig deeper, because a lot of the more digging goes on is in a lot of research. So bank research, research houses, whatever. And if I pull up something here. So let me see. Okay, so first, guys, so here on the floor, a lot of us here are big fans, for example, for Danske Bank, just because they provide a very good roundup for the week ahead. They give an overview of what's going on the week ahead. So we can just go in and just very simply say, here, I think we go. Where is our? We want to have the weekly focus. The daily one, you can read it, when it comes out, and we just say, okay. So we're just rounding up. What are the themes? So the improvement in the European countries in terms of rates of spreading, in terms of the vaccinations, because another theme that's been going on is the headlines around the botched rollout of the vaccines in Europe. Okay, so EU rollout, and again, I can't spell. Let's just call it roll. So much for that. And yeah, and then we can add it to the list, and we just want to organically build our list of themes. Okay, and then we have a bit of feedback on the contraction of GDP. We're just understanding that different countries have the GDPs have come in differently from each country. This one was actually an interesting point of contention. There was a bit of drama or arguing, I've noticed, on Twitter about the importance of the core inflation, the 5-year high and so on, and why it was temporary or why it was not. Okay, whatever. The market didn't react to it, and you want to take just a small note of it, write in your diary. Okay, last time we didn't move off it, and this is one thing. It's one of those things where now, again, for those guys trading bonds, you'll probably know this very well. The bonds moved really, really well off that kind of news, October, November, whatever. And now it's a bit difficult, and I think someone Look, perfect question. So I think Simeon D has what sort of news lost touch affecting markets recently. So like, what news has become ineffective, and this is a very big thing. So it's kind of like you're beating a dead horse. Okay, so when news comes out and it's like boom, like it's market doesn't know what to do with it. It will that'll be the days where you can build career out of. You can level up. Um, you can level up your trading. For example, Harry, for those who watch, some of his streams, Harry had an excellent week in November when he he traded the rollout to the official announcement that the vaccines are coming and they're done and it's all good. Um, he had such a big P&L day on that day that now he can literally trade much bigger size. He didn't have to just incrementally gain. He just went just vertical bang, and then those are the days you can really build your account on. Okay, so that's when the market is crazy. But if the same news keeps coming out, it's just like you're beating a dead horse. And the best example is just those damn Brexit headlines that came out at the end of November, December. So if you perhaps you guys are a bit more currency focused, I think I've seen somewhere, if you're looking at the pound, I mean, the amount of Brexit headlines was just agonizing because nothing happened. Cable spiked one way. It was irrelevant. No one cared. And all you just heard were the same, stupid, repetitive, regurgitative headlines. And it was just a dead horse. The market's pretty much priced in. We're going to have some kind of deal unless something crazy happens. That's it. Boom, done. And this is where I'll probably disagree with people. I'm sure guys on the trading floor right now maybe will say, hey, look, we do care about the spending. And yeah, if you look specifically how the markets are right now, and I'm going to get into charts very soon, because I think we've been streaming for an hour and I haven't even showed charts yet. But anyway, it's very easy to argue that the spending theme is still has yet to be developed, and of course, but you just want to be aware of when we care and when we don't care, because even in the back end of December there was, or November, are we going to get the spending before the election or after the election, or is it ever coming, or whatever? And then the treasuries, the bonds just didn't move. And for those who may not be so familiar, why do the bonds care about the spending? Is just in very simple terms, the more spending, the more borrowing. And because you judge all things being equal, there's a lot of things that price the bonds. So if the bonds have input 1, 2, 3, 4, 5, 6 of how they price, one price is the quality, the ability for the issuer to pay you back in time. So how creditworthy is someone to pay you back? And regardless of who they is, even if they're the United States or not so creditworthy country, just because of the simple fact that they now issue way more debt, theoretically, just because you have to price the bonds means that their ability maybe in the future may be more compromised than what it was last week to pay those bonds. If that's true with the US thing, with the US, probably not. But the market stuff should be priced at, and because they're issuing more bonds, you basically have, to raise that cash, they issue more bonds, and then you just you sell off in the bonds. The same way you'd have, like, if you have an increase in the oil supply, any market, you just increase the supply in any market. Ceteris paribus, whatever those economists say, all things being equal, you have to come off. And that's why the bonds have been selling on that stimulus news, added to the fact that it's a bit of, we want more risk, it's a bit more risk on flow. SPU is like on an elevator to the moon as usual. I mean, it's so that's kind of news which is a bit difficult now. It's not fresh where it's so easy to trade. And this is actually, I remember having very good days on back on trading the treasuries, because I'm a bit more bond focused. Just trading the headlines. Pelosi says this, then it gets downplayed by someone else, then something else happens, and we were all tuning into what she was saying, and then just trading off in the treasuries. Payable, do you trade on institutional manipulation? So yeah, and this is a hot topic always, because it's always manipulated when something goes wrong. But anyway, without being flippant, yes. So this is why data has been so ineffective sometimes, because it is very apparent. And I'm really annoyed, I can't remember now exactly, but I think it was on, was it January NFP? I think it might. Hopefully one of you guys will chase me up on this. I think it was on January NFP, where it came out however it came out, but it wasn't, yeah. And then one thing you look for is how, so you do see a lot of this where you expect the markets to logically react in some kind of way to data. And yet they're either static, they're dead, or they go one way, and all of a sudden you see massive absorption. You see icebergs everywhere on the price chart, on the footprint, and there's just someone on the other side just eating up. And what they do is they just use the liquidity from these kind of data points where they know it's going to be other guys just saying, oh look, GDP, that's bad. The GDP number came out bad. Sell SPU. And they're like, well, okay, GDP is bad, but we know that it's not going to affect SPU in the long run. It's going to be a great buy the dip. And they sit on the other side on the bid, and they just will hoover up wherever you sell into them, and they will just go boom, 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 and they'll just eat you up. Is that manipulation? I don't know. I mean, we gotta be specific with our words, okay? I don't want to say it's manipulation or illegal. That's just a tactic where they use it as a liquidity operation. They take the other side of your trade because they just take advantage of that short-term flow. So no, in that case, manipulation is perhaps the wrong word there. Just to be specific. I'm thinking in my head, if we're talking about, and this is the key, asymmetric opportunity, asymmetry. What is now the asymmetry? The market has priced in comfortable with drug reforming majority government. Okay, so upside is going to be much more difficult. I'm not going to be as aggressive with size of getting in, or just going bang, just sell it, or like go bang, buy it. Okay, why? The level's too obvious. There's a lot of longs in this market. Okay, there's so many people picking up this market. And when I talked about positioning earlier, how do you know there's positioning? And this is one thing I didn't get with the profile for so long, and here we go. Imagine, so this is one thing you understand how it's created if you understand the ladder, and this is why it's so powerful knowing price ladder, the order flow, the footprint, and so on. And I'll explain now. When the market traded down into this region, okay, and we started coming back. So if you notice, if I just split my profile so you can see time how it's auctioned into it, it came down to these prices, 16s. And someone with much bigger size probably stood on the bid and just, bought. Cool. Then we bounced. The market reacted off him because there's no one on the offer. Okay. We come back down, within the end period, which is, 1:30 GMT. We bought. And then there's that position, there's that sort of elasticity where someone's just perhaps picking it up, sitting there. And he's now most likely, he hasn't been challenged. The market hasn't traded like down here for him to be like, oh my God, what I'm doing. Maybe offload some of this depending who he was, so he hasn't been challenged. And then you can see that the market, then the guy who probably bought down here probably thought he was a genius, like, okay, I bought it really well. And then his bid came up. The general bigger players buying just said, okay, we're not getting these prices anymore at 20s. They just bring their bid up. They're now buying up everything at 34s. And then we go up to 40s where someone is just probably just trading, just churning that 40s, just buying, accumulating, hoovering it up, okay? And those guys are locked and loaded. They're there sitting. Same way how those GameStop guys, all the holders were sitting, like, please to God, please keep going. You had all that, so, they're all positioned, okay? And then what happens when all those guys are sitting there, all positioned, just waiting? Someone has to come in and just take the price higher. No one comes. And then within the situation, people who are positioning these BTPs, they say, bad news comes out, bad for BTPs. You can have them running for the exits. There's not enough liquidity. The price will just absolutely get hammered. You have a beautiful place, and this is why it becomes your sort of like your execution zone. And so that is a much more powerful. You'll have like a liquidation move. And because that move will be so aggressive, like it'll go boom, 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 you can hit it with bigger size. Because now you have skewed the probabilities that that the market isn't going to come back. It makes complete sense that now, if you're speaking in terms of statistics, your expected value is that much higher. You are going to put more size on it, obviously. The probabilities so favor you because the tail event, which we don't think will happen, the market doesn't think will happen, has now just happened. And not only do we have to reprice it, A, B, these guys have got to puke, they've got to get out, and C, it's going to attract new sellers, and then it'll just keep going. Okay, so this is where you want to be focusing on your execution, and that's the window. I want to be thinking, can I get away with 40s? Okay, maybe I can't get away 40s, not fast enough. Who knows? Depends what I'm doing there. Depends. Maybe I got into bunds or something, but that's the area of execution. But as we move further and further away, I don't want to be too aggressive within this region. But then you ask yourself, okay, let's look more at other positioning. And of course, you can say, oh, you can see it maybe on the daily chart. I will be looking at bunds, absolutely, and most likely I will also trade on the bunds, of course, Garrett. But just to give it, a bit more variation on the kind of markets and so on. And I think the way the BTPs are positioned, especially since it's so related to the news, I think is the one to trade on it. But you'll do fine in bunds, of course. And then we'll talk about bunds. And actually, I'll tell you why this trade will also be good in bunds. And again, it's nothing super crazy secret formula. It's just because of understanding that metagame of positioning of how the bunds have traded recently. Okay, guys, right on the mark, 2 hours, 30 minutes. I could literally keep going, but I don't want... I'm respectful of your guys' time, and I obviously don't want to do this forever. But yeah, the videos will be up there. We'll be doing Sunday streams, more streams. It'll all be there. This is our big sort of, we want to, bring more guys on here. So I literally, guys, I'm so chuffed that all of you guys were on here. Thank you so much again. I mean, this is like amazing. Like I'll be so happy if there was just 10 guys. Like if it was literally 10 guys here and you guys learned something, and it was 10 guys here and you guys learned something, I'll be super happy. But the fact we got a very healthy amount today and you guys stuck through all the way, that's just amazing. So thank you so much, guys. It made all this effort setting all this up worth it. So
if you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.